Hey, what's up guys? John here. Over $2.9 trillion has been ripped from the stock market just this morning. It's the worst day for stocks since March of 2020. That happened at the same exact time as the jobs report just came out. Now, unemployment's going up. So you think about this.
The Bureau of Labor Statistics released the July jobs report this morning.
The U.S. added 114,000 jobs last month. At the same time, the unemployment rose to 4.3%.
Much weaker than expected.
Stocks are going down, unemployment is going up, auto loan repossessions are skyrocketing.
Repossessions were, at a moderate level, then they dipped, and now they're climbing back up.
Homes are not selling. 1 out of 4 home sellers are slashing their prices to try to attract a buyer. You look at Japan, Japan's having their worst day since 1987.
Traders have been offloading a wide variety of shares,
pushing the Nikkei benchmark into its second biggest fall on record and the largest since 1987.
You look at commercial real estate, it is falling like a rock.
Risks of commercial real estate loans on bank balance sheets.
There's a lot of it that's office debt. That will be harder to refinance because A, the cost of borrowing is up, and B, the value of those buildings are down.
And things are going to get a lot worse. And here's what I mean. This came out last year. Companies have $2 trillion worth of corporate debt. Most of this debt they took out, some very low interest rates in 2020, 2021, 2022. And now they have to refinance this debt, meaning they have to go back to the lender and they have to try to get a better loan. They try to get a new loan. And so when these companies are not hitting their earnings, you're seeing this across the board right now. Many companies are missing targets. What are they going to do? Well, they're going to have to reduce costs. How are they going to do that? Laying people off. Many of these people that they have at most companies, they've hired over the last several years at very high wages. And so they're going to start renegotiating wages down and laying people off, outsourcing talent, and trying to use automations and find ways to which they can save money. Like look at IBM, look at Intel, look at every major tech company. The Magnificent Seven, you look at them, Tesla, Apple, Google, Microsoft, you look at them all. What are they all doing? Slashing jobs, and a lot of the founders are cashing stock out. They were at the peak. Why? It's because everything is about to change in America, everything. In this video, I'm going to break it down. I'm going to show you exactly what's coming. Look at gold, for example. Gold tells the picture perfectly. And gold's at all-time highs. Why? People are looking for a safe haven because they know things are about to get real in this country. Please hit the like button. YouTube will share this content. Educate more people what's happening in our economy. And if you'd like to learn more about gold investing in precious metals, today's video is sponsored by ITM Trading. More on that in just a little bit. Take a look at this. So the Dow is now sub 40,000, 39.5. Look at this.
0.3%, we were looking up. We went up to 4.3%. We were looking for a rate of 4.1%.
They're saying the unemployment rate is 4.3%. That is still very challenging to believe. When you look at, let's call it the last 6 jobs reports, so you can't make this up. The June and May jobs report were just revised lower by an additional 29,000 jobs. 5 out of the last 6 jobs reports have now been revised lower. 5 out of 6. In fact, 10 out of the last 14 have now been revised lower. Not only is the unemployment rate now at a 3-year high, but revisions are the new normal. Hundreds of thousands of jobs have been revised lower in 2024. So why? Well, why is this all happening? Look at Japan. Why is this happening? Well, this is what is fascinating here for America. When you look at what's happening inside of the auto market, car repossessions rocketed higher in the first half of the year, a sign of rising consumer distress as the U.S. Federal Reserve weighs in interest rate cuts. So far in 2024, repos are up 23% with the same period last year, according to Cox Automotive, right? 129,000 views on this. And what's happening inside of the auto market is happening in real estate. It was happening in real estate, happening across the board with consumer loans. Look at this guy, for example.
Got me rolling. Today I got my man Marco approved on this 2019 GLC Mercedes. Marco, how was your experience today?
Man, it was great, man. It was great. Got me in and out. Good. You know what I'm saying? That's the baby.
Only $500 down, guys. First time buyer. Everyone's approved. As you know, all you need is your ID, piece of mail, and your name. DM me at Skibo Got Me Rolling. We're going to get you rolling off today.
Everyone's approved. The guy's selling like 5, 6, 7 cars a day. And he's selling to who? People that don't have credit, they don't have income. They can, borrow $500, so they have $500, and they have a picture of their ID, and they're going to get these cars on probably 7 or 8 year loans at insane interest rates, right? This is the world that we live in, where everyone pretends like everything is fine, but deep down, this entire economy is in big trouble. Because I would bet you look at his profile, and you look at a lot of all these different people are buying all these different cars. Like this guy, look at this.
What's going on, folks? It's your boy Steve got me rolling. Today I got my man Blake here. Came all the way from Louisiana.
Drove all the way from Louisiana to get that Nissan Altima, right? Why? Because he'll get them approved, right? This is what's happening. And you have to ask yourself, how are these people buying cars? And many people, 1 out of 5, has an auto loan over $1,000 a month. How are these people going to be able to pay the sky-high insurance cost? Insurance is through the roof. More Texas homeowners see double-digit insurance. Car insurance going up and up. Car insurance costs in California are going up. Full coverage rose 26% this year, right? We're going to see an auto loan repossession rate which we've never before seen. So it's not just the job market that's getting hit, the auto market that's getting hit. It's literally every facet of the U.S. economy. When people lose their cars, how do they get to work, right? You start to look at this entire scenario for what it really is. Like Intel, their stock is down 29%, the lowest level since 2012. One of the United States' largest tech companies has erased 1/3 of its value in 2 days. Completely normal. Like look at regional banks. All these regional bank stocks all down. Why? Because regional banks hold 70% of all commercial real estate debt. 70%. Let's look at what that would mean. Let's say you bought this deal. This property. This sold in 2006 for $332 million. $332 million. Imagine you're the regional bank and you're lending 70% of that $330 million. You're lending $210 million on it, right? Let's say that that's what you're doing. And then it goes and sells for $8.5 million. So you basically lose your entire investment. The entire investment. It goes from 332 to 8.5. This is happening throughout almost every city in America. You look at San Francisco, LA, Austin, you're seeing it start to pop up. In Oakland, in Chicago, in St. Louis, in Atlanta, in Philly, in New York, all over the country. I was just in Miami yesterday looking at a property. It's in foreclosure. I'm looking at it because it's in Wynwood. And it's a $102 million loan that the lender is foreclosed on. You look at it out front, it's just a beautiful, beautiful structure. They thought they were going to have tons and tons of people that are going to want to live there inside of Wynwood and rent space there like a WeWork. Didn't work out. The same thing in different forms is true with commercial real estate nationwide. Long-term tenants, short-term tenants, they're all pulling out. I mean, look at gold. Gold's at almost $2,500, $2,468 right now. It was just at $2,500. I think gold, we're going to see really make some big moves. And why? Because gold is a safe haven asset. It's where people go when things start to get scary, when they don't know if money's going to be good in the bank. They don't know if, we're walking into some type of war, we're walking into some type of crisis, we're walking into something, and they just want to store and protect their money. That's what gold is for, nothing else. That's why Warren Buffett always say, oh, gold's not a great investment because, it doesn't produce a yield. But then, he invests in it. You look at Sam Zell, he invests in it. And you look at Ray Dalio, they invest in it. Why? The same thing is true with all the wealthy banking dynasty families, to hedge themselves against something. I think that we're walking into a situation where if you're hedged, you're probably going to thank yourself later. So if you are interested in learning about investing in precious metals, gold, silver, getting any information, the more information you have, the more informed decision you can make. Check out ITM Trading by clicking the link in the description below this video or giving them a call. So yeah, look at this. Mortgage rates. Everyone thinks that mortgage rates are going to come down and everything is going to be fine. But the reality couldn't be further from the truth. Because mortgage rates, let's say for example, Zillow is claiming the average home is now $363,000. The average home. That's wild because Forbes is saying it's $412,000. And when you look at Fred data, Fred's saying in 2022, average home was about $442,000 in America. Now they're saying it's $412,000. So they're basically saying the average homeowner lost $30,000 in equity from 2022 to today. But what's very fascinating is that the average buyer, the average first-time buyer, and also take into consideration 40% of all mortgages in America were taken out during the peak of the housing market, 40%. So when you take into consideration that the average first-time buyer put down 6% on top of $400K after closing costs, all these people are underwater. All these home buyers are underwater that bought market level housing, median home prices back then. If they sold it, they would lose money. I mean, why? Well, because they'd also have to pay realtor fees, commissions, not just losing their deposit. They have to come out of pocket 20, 30, 40 grand to sell the property. How many people have that, right? It's a problem for a lot of these homeowners. And nearly 2/3 of all home listings have been sitting on the market longer than a month as buyers grapple with higher costs. Well, this is what it would look like to buy a $400,000 home today. If you have an 800 credit score. So credit score 800, 7.045%. You put 6% down, right? $24,000 down, 30-year fixed, 7% interest rate, $400,000 purchase price, $3,426 a month. So to comfortably afford that, you have to make $120,000 a year, 10 grand a month, right? That's a lot. That's a lot for the average American. This isn't like upper middle class. This is the average household is what they're saying. So you look at this. If rates drop, let's just say they drop 0.5%. Let's say they drop 1%. Let's say interest rates go to 6%, from 34.26 to 31.79. Is that a couple $100 a complete deal breaker? Would that change the entire dynamic of investing in real estate? Or would we see prices go up? I personally think that it wouldn't change things for most buyers. A lot of buyers right now are really strapped for cash. They want to buy, but the deal has to make a lot of sense. When they look at the price to rent, in most areas they can rent for 50, 60 cents on the dollar compared to, locking in themselves into a mortgage. And I think we're going to just see, even when rates go down, that prices are not going to be going up. We've already seen, mortgage rates go from, 8% to where we are right now. Have we seen massive demand for housing? No. I think demand would probably be somewhere around 4% or 5%. That's what I think. 4%, you'd start to see, a lot of buyers jumping in. 5%, you'd see some buyers jumping in. But 6%? No, I don't think so. I don't think that's happening. And considering the fact that the average, nearly 89% of U.S. homeowners with mortgages have interest rates below 6%, if they drop to 6%, these homeowners can't refinance. They can't get access to liquidity. So it's a really, really interesting period in this economy. And I think that what we're going to see here is a situation with a lot of distress incoming. People aren't going to be able to afford the insurance increases on their homes, insurance increases on their taxes or tax increases, insurance increases on their cars. Across the board, everything is going up except wages, food prices, everything. Who is going to be the real winner of this game? It's going to be the entrepreneurs, the business owners, those with stable jobs and stable incomes, those with exceptional credit, those that are, positioning themselves financially for it. I really do think gold and silver, land, all these things are going to, stand the test of time. Some of these meme stocks, cryptos, some of these traditional stocks, commercial real estate, I think that is all, it's going to be on a downward trend, a lot of it. Not all of it, but a lot of it. I mean, what do you think? What do you think about this? $2.9 trillion ripped out of the market, walking into the election, coming soon. You look at it, every single week, it's one crazier story after the next. I think we're walking into a black swan event. If I had to bet, I would say we're walking into a black swan event next 6 to 12 months. Let's have a conversation about this below. Really curious as to what you think about this entire situation. And for more information on ITM trading, click the link in the description just below this video. Schedule a free consultation with them, and I'll catch you next video.